Yes, good evening.
Good evening, sir.
Good evening, sir.
Good evening, sir.
Yes, good evening. Shall we start?
Yes, sir.
Yes.
Yes, sir.
Yes, sir.
So we discussed till place of supply, correct? Introduction, supply, charge, and place of supply. Those were the discussions that we had. Till here, anyone has any doubts? No? That's the case. Can we continue with the next discussion?
Yes.
We have two small chapters, time of supply and value of supply. So we'll continue with that discussion itself. So time of supply. In case of time of supply, we have two parts: time of supply of goods and time of supply of services. Section
12 and 13.
12 for goods,
12
13
and
for
13. Very good. Section 12 is goods and 13 is services. Excellent. So in that we have 6 subsections rather, right? Of which 2 and 3 are unique for them. 4, 5, 6 are the same for both 12 and 13. So time of supply are of two parts. Section 12 talks about time of supply of goods, and section 13 talks about services. Section 12, in case of goods, we have 12(2) forward charge. In case of goods for forward charge, time of supply is
Date.
Date of invoice.
date of invoice or date of
due date of issuance.
due date of invoice or
That
date
is
of
earlier.
correct. Date of invoice or due date of invoice, whichever is
Earlier.
Earlier.
whichever is earlier, correct. Now here we do not have a receipt, correct? Receipt to be discussed, not there here because there is exemption on advance. However, that exemption on advance is applicable only in case of forward charge mechanism. In RCM you don't have it. However, no such exemption for
Composite dealers.
very good
Claims. RCM.
composition dealer, RCM, and
Specified.
Specified
specified
actionable
actionable
claims.
claims. Very good. Specified actionable claims. Here we are talking about date of invoice, due date of issuance of invoice. What is the due date of issuance of invoice? If there is movement of goods, rather if goods are being removed.
On or before removal of such goods.
Very good. On or before removal of such goods from the factory or godown, correct? On or before removal. Whereas in other cases,
Date of delivery or making available to the recipient.
excellent. Date of delivery or making it available to the recipient. Then in case of continuous supply of goods,
Date of
Periodical statement or periodical.
yes, date of periodical statement and date of periodical
payment.
yes. Periodical statement, periodical payment. And then we have last one, sale on approval basis. In case of sale on approval,
Date of supply or 6 months from date of
date of supply
Date of supply, which
or 6 months from the date of removal. Correct? 6 months from the date of removal, whichever is
earlier.
earlier. Yes, that is the due dates for issuance of invoice in case of goods forward charge. Whereas in case of services forward charge, 13 subsection 2, first to start only have to see whether
if
It is issued within the due date.
or not.
yes, whether invoice issued within the due date. Invoice issued within the due date. If the answer is yes,
Date of invoice or date of receipt of payment.
very good. Date of invoice or date of receipt of payment, whichever is
Earlier.
Earlier.
Earlier. Whereas if the answer is no,
Date of
Date of
provision.
invoice.
Date of provision of service.
date of provision of service or
Date of receipt of payment.
date of receipt, whichever is
Earlier.
earlier. Date of provision of service or date of receipt, whichever is earlier. Yes. Now, in this case, what do we understand by date of receipt?
Debited in bank account or
Date of
recorded in the books of account.
recording in the books, or since this is receipt, date of
Credited in the bank account.
credit in the bank account. Yeah, credit in the bank, whichever is earlier. Yes, that's the concept with regard to forward charge mechanism here as well. Now, here also we have due date for issuance of invoice, correct? What is the due date normally?
30 days.
30
30
days.
days.
Normally 30 days. Very good. However, in case of banks, financial institutions, NBFC,
45.
45.
45 days.
45 days. And in case of banks,
Nice.
financial institutions, NBFCs, insurance companies.
Telecommunication.
Here also we have
Telecommunication.
yeah, insurance companies is there. Here additionally telecom operators.
End of the quarter.
Quarter ends.
For what?
Between this.
Supply to distinct persons.
Yes, for supply between distinct persons, end of the quarter. For supply between distinct persons, end of the quarter. Understanding? In case of continuous supply of service, to constitute continuous supply of service, what is the minimum time period?
3
3 months.
3 months.
More than 3 months. Yes. Continuous supply of service. We have to see different scenarios, right? First one, due date of payment ascertainable.
Due date.
Of such
Such
asset.
due date.
due date.
Due date. Very good. Due date not ascertainable.
Date of
payment.
Yeah, date of payment. In case of milestone,
Milestone based.
Completion of such
When such
milestone.
milestone is achieved.
achievement of or completion of the milestone. Yes. Completion of the milestone. Perfect. Are we clear with this? This is forward charge. Forward charge related goods and services, both we have discussed. Can I move into RCM then?
Yes.
Yes.
Yes. Coming to RCM 12 subsection 3 for goods, we have to see 4 things there. Date of
receipt
of goods, date of
Payment
recorded.
payment recorded in the books. Okay. Yeah, payment recorded in the books.
date of debited or date of
In bank.
Date of debit in the bank account.
31st.
31st day
Yes.
from the date of issue of invoice.
31st day from the date of invoice. Whichever is earliest. Whichever is earliest. So this is pretty straightforward that we have with regard to goods. Whereas with regard to services, the 13.3 provision that we discussed, there we have understood that we don't have date of receipt of service there, right? Directly I can go with payment.
Date of payment.
Date of
Date
payment
of
in books.
Date of
recorded in the
payment.
books.
the book.
Date of payment
Debited in the bank.
Debited in the bank.
In the book.
debited in the bank.
61st day from
61st day
day
from
of-
the date of invoice.
Yes.
From the date of
61st day from the invoice date. However,
or self invoice.
yes, in case of self-invoicing,
The date of
The
issue
date
of invoice.
Date of issuance.
date of issuance of invoice. Correct. Date of invoice. Perfect. That whichever is earliest would be
Earlier.
the timelines in case of RCM for services. Correct. However, there we also have one additional point.
Import.
Very good. Import of service from
Associated.
Associated enterprises. In that case, there might be a scenario where there may not be any consideration at all. So for such cases, no invoice to be generated. So in such cases, date of payment or
Date of
Date of
release.
recording in the book.
The books of
date of recording in the books, whichever is earlier. Clear? Yes. Everyone there?
Yes, sir.
Yes, sir.
Okay. So this is RCM. Then 12, 4, 13, 4, same discussion. What is there? What are they talking about?
Vouchers.
Vouchers. So in case of vouchers, they are divided into two categories.
General and
General
General
and
voucher, specific voucher.
Specific
General
vouchers.
voucher means you can use it for anything. Specific voucher means only for that particular item that is issued. Correct. For general voucher, what's the
Date
time?
of redemption.
Date of redemption of such.
Date of redemption of voucher. For specific,
Date of issuance.
Date of issuance of.
date of issuance of voucher. Okay, that is with regard to voucher. Then coming to 12, 5, 13, 5,
Residual cases.
residual cases. So in case of residual case, we have to see whether returns are to
Return
be
is
filed.
filed.
Correct. If returns are to be filed,
Date of
Date of filing of such returns.
date of filing or due date of filing?
due date.
Date. Due date of filing such return. If no return to be filed,
date of payment.
Date of
Payment of tax.
date of payment of tax. Very good. Date of payment of tax. That is residual case. Then the last discussion, 12, 6, 13, 6. What is that?
Addition.
Addition in value, enhancement in value in the form of interest, late fee, etc. Correct. So in that case,
Realization.
Date of realization.
date of realization. Excellent. So these are the provisions of time of supply. That's all. That's all we have discussed, right? So this is what we had in that chapter. Before we move further, can we look into what's there in the material? Anyone has any doubts before that?
No, sir.
No? Okay, fine then. So come to page number
29.
29. No, 29 is talking about
Time of supply.
26.
yeah, just give me a second. This is not okay, wait. It's not that material. Just give me a second. Yes, time of supply. So same thing, whatever we discussed, 12.2 and 13.2, that discussion, no GST at the time of receipt of advance for supply of goods. In case of supply of goods by a registered person under forward charge, excluding composition dealer, GST is to be paid on outward supply of goods on the date of issue of invoice or last day on which invoice ought to have been issued in terms of section 31. So this is when, in case of goods, forward charge other than
Composition.
yes. In all other cases, that is normal forward charge cases, we have to just go with date of issue of invoice or last day on which invoices ought to have been issued, due date. Similarly, in case of service, invoice issued within the time period under 31, earliest of the following: date of issue of invoice, date of receipt of payment, that is entering in the books or crediting in the bank account, whichever is earlier. Invoice not issued within the time period prescribed, earliest of the following: date of provision of service, date of receipt of payment, that is entering in the books or credit in the bank account, whichever is earlier. So instead of invoice date, we go with date of provision of service if invoice is not issued within the due date. Where we are unable to determine in this, where above events are unascertainable, date on which recipient shows the receipt of service in his books of account. In his books of account. Same way, What is the due date for raising invoice? For before or at the time of removal of goods for supply to the recipient, where supply involves movement of goods, or delivery of goods or making available thereof to the recipient in any other case. Time of supply of service, before or after provision of service but within 30 days, 45 days in case of insurance company, banking company, financial institution including MBFC from the date of supply of service. Time of supply where tax is payable under reverse charge, time of supply of goods, earliest of the following, date of receipt of goods, date of payment as entered in the books of account of the recipient, or date on which payment is debited in the bank account, whichever is earlier, or 31st day from the date of issuance of invoice by the supplier. Time of supply of service, date of payment, 61st day from the date of invoice of the supplier if he is required to issue the invoice. If invoice is not issued by the supplier, if self-invoice cases, date of invoice by the recipient, wherein invoice is issued by the recipient. Where the above events are not ascertainable, time of supply shall be the date of entry in the books of account of the recipient. Did everyone understand this time of supply of service?
Yes, sir.
Yes, sir.
Yes, sir.
And be asked for our exam, September 25. Very, very important. Okay, be very careful with that particular discussion. RCM, if invoice issued by the supplier, we have 61 days. If invoice is issued by yourselves, immediate. Self-invoice, correct? You only have issued the invoice. As soon as you issue the invoice, pay the tax. That's what the logic is. Whereas in case of import of service from associated enterprises, date of entry in the books of account of the recipient or date of payment, whichever is earlier. Tax payable not at the time of not at the time of receipt of advance for supply of goods. Relaxation applicable only for regular taxpayer and forward charge, not applicable for specified actionable claims. Time limit for issuance of invoice for supply of goods. In case of continuous supply of goods, invoice should be issued before or at the time of issuance of periodical statement or receipt of periodical payment. In case of goods sent or taken on approval or for sale or return, invoice should be issued before or at the time of supply or 6 months from the date of removal, whichever is earlier. Time of supply of vouchers, common for both goods and services. Specific voucher, date of issue of voucher. General voucher, date of redemption of voucher. Time of supply of goods in residual cases, common for both goods and services, where periodical return is to be filed, date on which return is required to be filed. In other cases, date on which GST is paid. Time of supply in case of enhancement in value on account of interest late fee upon realization of value. Now, in case of services, forward charge time of supply, we have discussed date of invoice, or if invoice is not issued within the due date, date of provision of service or date of receipt, whichever is earlier, correct? Now, receipt if happens earlier, then you have to pay tax as on the receipt date. However, if you have issued an invoice, that invoice amount is received, along with that they have received some extra amount, then you can defer the time of supply to the next invoice. However, there is a monetary limit. What is the monetary limit? Up to
1,000 rupees.
1,000. We can receive excess of only up to 1,000 rupees, not beyond that. Correct? Only up to 1,000 rupees excess. Very good. Excess payment up to 1,000. Option of taking invoice date as the time of supply. For payment of up to 1,000 rupees received in excess of the invoice value, supplier can choose to take the date of invoice issued with respect to such excess amount as the time of supply of service in relation to this excess value. Tax to be paid on specified actionable claims at the time of receipt of payment for such supplies by the supplier. For specified actionable claim, no such exemption as given to other goods. Yes, with effect from 1st of October 2023, the benefit of exemption from payment of tax upon advances available to supply of goods is not available to supply of specified actionable claims. Therefore, for advances received on specified actionable claims, GST is payable at the time of receipt of advance. So we had discussed about this circular also. Time of supply in respect of supply of services of construction of road and maintenance thereof of National Highway projects of NHEI in hybrid annuity model, HAM, hybrid annuity mode model, right? This was lifted and asked in, I think, Jan 25 exams. Lifted. Right, same discussion. Just explain what happens there. Okay, that was the question. Under the HAM of concession agreements, the highway development projects are under build, design, operate and transfer model. Build, design, operate and transfer model, wherein the concessionaire is required to undertake new construction, of highway as well as operation and maintenance of highways, the payment terms for the construction portion as well as operation and maintenance portion of the contract are provided in the agreement. The contract needs to be looked at holistically based on the services to be performed by the concessionaire and cannot be artificially split into two separate contracts for construction and operation and maintenance based on the payment terms. The concessionaire is bound contractually to complete not only the construction of the highway but also to operate and maintain the same. In HAM contract, the payment is made spread over the contract period in installments, and payment for each installment is to be made after specified periods or on completion of an event as specified in the contract. The same appears to be covered under continuous supply of service definition under 2 clause 33. Therefore, in this case, continuous supply of service, what is the time of supply? What is the due date of issuance of invoice?
30 days.
6 months.
Continuous supply of service depends on due date of payment ascertainable or not. If due date of payment is ascertainable, such due date. If not, date of payment itself will be the date. However, if it is milestone based, then based on the milestone. So, it is clarified that the tax liability on concessionaire under HAM contract, including on the construction portion, would arise at the time of issuance of invoice or receipt of payments, whichever is earlier, if invoice is issued on or before the specified date or date of completion of the event specified in the contract as applicable. If invoices are not issued on or before the specified date or the date of completion of the event specified in the contract, tax liability would arise on the date of provision of the said service, that is, due date of payment as per the contract or date of receipt of payment, whichever is earlier. It is also clarified that as installments or annuity payable by NHAI to the concessionaire also includes some interest component, the amount of such interest shall also be includable in the taxable value for the purposes of payment of tax on the said annuity or installment in view of 15(2)(d) of CGST Act. So, interest payable also should be added to the value itself because interest takes the nature of original supply. Okay, this is the circular that we have with regard to the national highway projects. So, this is about time of supply. Are we clear with this? Can we move on to the next chapter?
Yes.
So,
Yes.
The next chapter that we have is a small chapter. Correct? Which is value of supply. Section
15.
15.
Now, under section 15, it says I can apply section 51 if two conditions are satisfied. What are the two conditions?
Price should be
Price should be the sole one.
Price is the sole consideration.
Supply between unrelated parties.
Sole consideration and yes, supply between unrelated persons. If these two conditions are satisfied, then value of supply is equal to 15(1) plus 15(2) minus 15(3). Correct? So 15(1) says transaction value. What is transaction value?
Amount paid or payable.
Very good. Amount charged, amount paid or payable for such particular transaction. That itself is the transaction value. That is 15(1). Then to that we have to add certain things given under 15(2). Correct? What are the items that we have under 15(2)? First one, taxes other than GST. All your municipal tax, entry tax, etc. Property tax other than GST if charging from the
Charge
recipient.
separately.
Very good. Charge separately from the recipient. Similarly, liability of the supplier in relation to the supply paid by
Recipient.
yes, paid by the recipient. Then third one, incidental expenses. Incidental expenses means expenses in relation to that supply. Now till when I have to add it? Till
Made the goods is made available to the recipient.
Yes, basically till the completion of supply. Correct. Till it is made available if it is Ex Works contract. Till the delivery if it is as per the contract delivery is required. So till the completion of supply. Then fourth one, subsidy. Subsidy, it should be first point.
Other than government.
Price
Other
linked
than
subsidy.
government.
Price linked.
Price
First,
linked.
it should be price linked subsidy. Direct price linked subsidy. Second, it should be received from other than
Central government, state government.
Central government.
other than central government, state government. Last one, addition in value. That is
Interest
interest.
penalty.
Interest, late fee, penalty.
Penalty. Yes. These things should be added to the value of supply. Similarly, 15.3 talks about exclusions. The only exclusion that we have is discount. Correct.
Discount.
These discounts are of two types. At the time of supply, post-supply discounts.
Post-supply discount.
Yes. At the time of supply, it will be reduced from the value of supply if
Shown in the
shown in the invoice. Yes. If such discount is recorded in the invoice, it will be reduced from the value. For post-supply discounts,
If ascertained at the
If
time.
I just
very good. Three conditions to be satisfied. Very good. First one, terms should be established at the time of supply. Terms should be established at the time of supply. Second,
worked out when
Worked out invoice
Invoice
basis.
wise.
yes, it is worked out invoice wise. And third one,
Proportionate ITC reversed by recipient.
proportionate ITC reversed by the recipient. Are we clear? Everyone?
Yes.
Yes. Yes. So this happens by way of a credit note, right? GST credit note. If none of these conditions are satisfied, then it will not be reduced. In books, how will we reduce? By issuing commercial credit note. Very good. Yes, that's all. Okay, that's all we have with regard to value of supply, right? If in any of those two conditions are not satisfied, then I have to go with 15.4, which says go with the rules, which we do not have anyhow in our syllabus. Can I go back to the material?
Yes, sir.
Yes.
Yes, sir.
Come back to the material. Value of supply 15.1. Supplies made solely for price in money, monetary consideration to unrelated persons. So value of supply is transaction value under section 15.1 plus elements are specified under section 15.2 and 15.3. 15.4 and 15.5. Chapter 4, determination of value of supply CGST rules when price is not the sole consideration, solely for non-monetary consideration or part monetary consideration and part non-monetary consideration or involving additional consideration or supply to related persons. In all those cases, we have to go with the rules. Inclusion in the value. Value of supply includes taxes other than GST charged separately, third-party payments made by the recipient in relation to supply, which supplier was liable to pay and were not included in the price, incidental expense including anything done by the supplier in respect of supply till the delivery of goods or supply of services if charged to the recipient, subsidy directly linked to the price of supply other than the ones given by central government, state government, interest or late fee or penalty for delay in payment of consideration. Subsidies linked with the price received from central government or state government not to be included, whether it is price linked or otherwise doesn't matter. Whereas if it is received from others, if it is not linked to the price again, not to be included. Only if it is received from other than central government, state government, linked to the price should be included or added as per 15.2. Exclusions from value under section 15.3, discounts given before or at the time of supply and recorded in the invoice, post-supply discounts or incentive if known at the time of supply and linked to the invoices, and proportionate ITC reversed by the recipient on the basis of document by the supplier. So what is the discussion here? Summary: value of supply is the price price is the sole consideration. The answer is no, go to rules. If the answer is yes, supplier and recipient are related, answer is yes, go to the rules. If the answer is no, whether it is a notified supply under 15.5, if the answer is yes, go to the rules. If the answer is no, then the value of supply is transaction value under 15.1 plus elements to be added under 15.2 and elements to be subtracted, that is exclusions, discounts under 15.3. Is that clear?
Yes, sir.
Yes.
Yes, sir.
This completes our discussion on value of supply. So with this understanding, can we move on to the next chapter?
Yes.
Yes, sir.
Yes. The next chapter that we have is input tax credit. Now, with regard to input tax credit, we have three important sections there. Section 16, 17 and 18. So input tax credit. Under that, section 16. It has 6 subsections now, correct? Subsection 1. Who can claim ITC?
Who has
Registered
put
person.
tax credit?
Registered person.
It should be a registered person. Every registered person is entitled to claim ITC on inward supplies used or intended to be used in the course or furtherance of business.
Furtherance business.
In the course of furtherance of business. Then 16.2 talks about conditions, eligibility conditions. Under that, first one, possession of valid tax-paying document. It could be tax invoice, ISD invoice, debit note, bill of entry, whatever it is, a valid tax-paying document. Second, supplier should have filed his
GST-R1.
GSTR1 and the same is reflected in
GSTR2.
GST-R2B of the recipient.
GSTR2B of the recipient. GSTR2B of the recipient. Then you should have received the goods or services, or both. Receipt of goods or services. However, for this, in case of bill to ship to,
Deemed to be received.
Deemed
deemed to be received. Deemed to be received. Then fourth one, tax to be paid by the
Paid to the government.
paid to the government. Tax to be paid to the government by the supplier. Correct? For this, to check this, we have rule
37.
37A. Very good. Rule 37A. What is that? We will discuss. Similarly, ITC is not restricted.
Restricted.
Officer has the power to restrict. Then you should have furnished
GSTR3.
GSTR3. If these 6 conditions are there, along with that, there are 2 provisos, correct? If goods are received in lots, then what happens?
Only on receipt of
Receipt of the last
Receipt of
lot.
last lot.
Upon receipt of last lot. Then second one, it says once you have received that inward supply, payment should be made within
180 days.
180 days.
180 days.
payment to be made within 180 days. If you do not pay within 180 days, what happens?
Reverse the ITC.
Reverse the ITC with interest. When I can reclaim it?
Whenever
Whenever
payment
the payment is
When
complete.
upon the payment is made, you can reclaim it irrespective of 16(4) time limit. However, here payment of 180 days condition is not applicable in 3 circumstances.
RC.
Schedule 1, RCM, and
Schedule 1, very good.
Addition to the value.
Addition made to the value.
Yes, liability of the supplier paid by the recipient. that case, addition to the value, correct? Liability of supplier paid by the recipient, 15(2)(b). Paid by the recipient. So what is this rule 37A talking about? It says I have to see whether supplier has filed his GST R3B. When should I see it? For a financial year?
Before 30th September.
30th September.
30th September of the next financial year. If the supplier has not filed his GST R3B within that time limit, then
Reverse
we have
the
to
Yes,
reverse the
Within
ITC
30th
within
November.
very good.
30th November.
Within 30th November without interest. Beyond 30th November
With
With
interest.
interest.
with interest. However, subsequently when the supplier files the GST R3B, what happens?
we can reclaim.
Reclaim the ITC.
Reclaim the ITC without regard to 16 for time limit. Correct? That is what rule 37A, sorry, it's not 37, it is rule 37A. That is what rule 37A tells us. Everyone following?
Yes, sir.
Understanding?
Yes, sir.
Yes. Okay, fine. That is subsection 2, the conditions. Then I can move on to subsection 3. What is subsection 3 telling us?
If depreciation is claimed, then
Depreciation claimed on tax component.
Very good. If depreciation is claimed on the tax component,
ITC is not allowed.
No ITC.
no ITC can be claimed. You can capitalize that asset in the books, no problem. You have to capitalize only the taxable value. Don't capitalize the GST amount. If you capitalize GST amount, that means you are claiming depreciation on GST as well. So if you are claiming depreciation on GST, then no ITC. 16(4) talks about
Time limit.
time limit to claim ITC. What's the time limit?
30th
30th November of next
November.
30th November
Date of
of the
filing
next
of annual
Or
financial
date of
year.
filing of return.
return.
Date of filing of what return?
Annual return.
Annual
return.
Annual.
Annual return. Yeah. Date of filing, annual return, whichever is
Earlier.
Earlier.
there. Then subsection 5 tells us, again, not applicable for us. This is basically for financial year 17-18 to financial year 2021. The last date to claim ITC is 30th November 2021. That's what it says. For us, relevant is subsection 6. What is this?
Revocation.
Time
The
limit.
registration is cancelled.
Registration.
Next
Revocation.
step. Revocation of cancellation. Yes. Time limit to claim ITC after revocation of cancellation. After revocation of cancellation, what is the time limit to claim ITC? It says
30
16 for time limit or
30 days
30
from
days.
30 days from the date of revocation.
Order of
Whichever is
revocation.
Whichever is
Transmission.
later.
30 days from the date of revocation, whichever is later.
later.
Very good. This can be important for us, this exams. Okay, this new provision, right? So, can be important. So, be careful with regard to 16th subsection 6. Is that clear? Everyone till here?
Yes, sir. Yes.
Yes. After section 16, we went on to section 17. What is section 17 talking about?
Apportionment of
Apportionment of credit and blocked
Blocked
credits. Apportionment of credit and blocked credits. So here we have two parts. 17.1 to 17.4 talks about apportionment of credit. So with regard to apportionment of credit, what does it tell us? You have to claim the ITC, you have to utilize it only for the business purposes. And you should utilize it towards
Taxable
taxable supplies. Very good. Taxable supplies. Now, if we have not utilized for business purpose, you will not claim, you will not get ITC. If you have only exempt supplies, you will not get ITC. But what if I have partly utilized for business, partly for non-business, partly for taxable, partly for exempt, then only in relation to such taxable or business purpose you should get it. So proportionately you should be claiming it. How do we claim that proportion, rules, etc.? We have there in 17.1 and 4. Again, we need not bother much about it because not part of our syllabus. What is important for us is 17.5
Blocked.
Blocked credits.
Yes. In case of blocked credits, there are list of credits which are blocked. You cannot claim. First one that we have there is
Transportation.
motor vehicle
Motor
in
vehicles.
relation to
Transportation of passengers.
Transportation.
very good transportation of passengers. Motor vehicle in relation to transportation of passengers. That will have two discussions. Here, motor vehicle is divided into two categories. One, it could be rails. It could be special purpose vehicle used inside factories, correct? Or other motor vehicles. Under other motor vehicles, I will categorize them into two-wheeler, three-wheeler,
Less than 25.
and four-wheeler and beyond, correct? So two-wheeler and three-wheeler up to 25 cc, greater than 25 cc. These two cases, what happens?
ITC can be
ITC.
Can be claimed.
ITC is available. Yes, you can claim it. For more than 25 cc and four-wheeler, have to see.
How many seats?
13 seaters.
Seating
Yeah,
set.
greater than 13-seater,
13-seater.
up to 13-seater, correct? Yes.
Yes, sir.
Yes, sir.
If it is greater than 13-seater, what happens?
ITC.
ITC is allowed.
ITC can claim.
Yes,
ITC is
ITC is
available.
allowed. If it is up to 13-seater, then I have to see for what
Block
purpose that I am using.
purpose.
Yes. Taxable supply of further supply of such motor vehicle. Second,
Transportation.
Driving
Transportation of passengers.
transportation of passengers. Very good. Transportation of passengers. Third,
Imparting or driving.
Driving.
imparting training on driving such vehicle.
More.
Then,
ITC is allowed.
ITC is available.
ITC is allowed.
ITC is allowed.
in other cases, if it's used for other purposes,
ITC is
it
blocked.
is blocked.
ITC blocked.
Now, what if that vehicle is used for transportation of goods?
It is allowed.
Brilliant.
Allowed.
Without any other condition, correct? Straight away it is allowed.
Allowed.
Is that clear?
Yes.
Yes,
Everyone
sir.
still here?
Yes, sir.
Sir,
Yeah.
in the two or three-wheeler greater than 25 cc, how can we check for seaters, sir?
Obviously, that will always be up to 13-seater. Natural, right? So only beyond four-wheeler and beyond, only there we will be checking the seaters. Yes. Now, not only that motor vehicle, certain things incidental to such motor vehicle also comes under the restrictions. Correct? What are those? First there we had was insurance, servicing,
Repair,
and
Repair and
maintenance.
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 Insurance, servicing, repair and maintenance. In this case, first I have to see whether original ITC on vehicle is blocked. If ITC on the vehicle is allowed, what happens?
Here also ITC is
ITC is allowed.
Yes, here also ITC is allowed. If ITC on vehicle is blocked, then only in two circumstances, correct? First one,
Further
Further
supply
Further
same line.
supply.
Manufacturer of such
Manufacturer of such motor vehicle. Then
provider of general
General
insurance.
general insurance. Yes, provider of general insurance.
General
service.
insurance.
Provider of general insurance service. In that cases, it is allowed. Whereas if it is used for other purposes,
Block.
blocked. Or in other cases rather, it is blocked. Same way, renting,
Leasing and hiring.
leasing, hiring of motor vehicles. Hiring of motor vehicles. Again, when I say motor vehicles here, vessel and aircraft also comes into picture. I'll just brief about that as well. Renting, leasing, hiring of motor vehicles. We have two discussions there again. If ITC on such vehicles are allowed,
Then ITC is allowed.
then ITC on renting is also allowed. If ITC on vehicles is blocked, then I have to see purposes. What are the purpose? Wherein I can claim it.
Further
Further
taxable.
same line.
Further taxable.
Further taxable supply of such motor vehicle.
Statutory obligation.
Yeah, further taxable supply when I say in the same line of business, correct? In same line of business,
Yes.
or a part of taxable composite or mixed supply. Yes. Second,
Statutory obligation.
Statutory obligation.
statutory obligation. Whereas if it is used for other purposes,
Block.
blocked. So this, whatever we have discussed here, it applies to vessels and aircraft also. In case of vessel and aircraft, if I have to directly go with the purpose, there are no other conditions to be checked, correct? I have to directly go to the purpose. In the purposes, it can be transportation of goods without any condition. Second, taxable supply. Yeah, taxable supply of further supply of such vessel or aircraft, transportation of passengers, then
Imparting training.
yes, imparting training on flying or navigating such vessel or aircraft. Is this clear? In these cases, ITC allowed, else ITC blocked. Till here, everyone?
Yes.
Yes. Okay. So this is about vehicles. Further, what we have discussions on food and beverages, outdoor catering, beauty treatment, healthcare service.
Health services. Cosmetic and plastic surgery.
Correct.
Life insurance and health insurance.
Cosmetic and plastic surgery, life insurance, and health insurance. Life insurance and health insurance. In these cases, we have two exceptions. What are the two exceptions?
Is of
Registered
statutory
persons may
obligation.
outward accept.
Further supply in the same line, or a part of taxable composite or mixed supply, or
Statutory obligation.
part of taxable composite or mixed supply, part of statutory obligation. Then next what we have is membership of a club, health and fitness centers, travel benefits, LTC basically, correct? In those cases, it will be allowed only if,
statutory obligations.
yes, only for statutory obligation. Are we clear? Yes. Then, so this was about the specific services. Then we discussed about construction. In relation to construction, we had two discussions there. One, works contract. Two,
On account.
very good, construction on own account. With regard to works contract, we have only three. We have three exceptions there. What are the three exceptions? First one,
Subcontract.
Not captured as in the
subcontracting.
books.
Very good. Subcontracting, that is in the further and so in the further line of supply. Then
Plant and machinery.
Immovable property, plant and machinery.
plant and machinery. Yes, if they are plant and machinery, then
It doesn't
Not
capitalize.
capitalized in the books.
Capitalized.
not capitalized in the books. Whereas on own account, we have only two exceptions.
Except the subcontracting, we have both the exceptions.
Very good. Plant and machinery and not capitalized in the books. Not capitalized in the books. Now, what is this plant and machinery? It includes any kind of apparatus, machinery, equipment, right? Which is
Fixed to the earth.
Fixed to the
fixed
base.
to the earth, which includes
Foundation support.
foundation and structural support. Foundation and structural support. However,
Does
it
not include
excludes
Pipes laid
land and building
land building and
Land building.
or any other
structures, correct?
civil.
Civil structures, correct?
Telecommunication towers.
Telecommunication towers
Pipelines laid
pipelines laid outside the factory.
outside the factories. Yes. Pipelines laid outside the factories. Is that clear? That is about construction. Along with that, we discussed various other points, right? Under 17.5. We said if you're purchasing from inward supply from composition dealer, then you will not get natural, because composition dealer will not charge GST for you. Correct. Similarly, if you are using it for personal purposes, you cannot. Similarly, in case of NRTP, only one ITC I can claim. What is that? NRTP.
Import of goods.
Import of goods. For NRTP, it is import of goods. Then if we are using it for CSR activities, we cannot. Then inward supplies, further consumption is done. Then the last one, free samples, gifts, goods which are
stolen,
lost, stolen, destroyed or otherwise disposed of. Right? In those cases also, we cannot claim the input tax credit. So these are the cases where ITC is blocked. Is that clear?
Yes.
Yes.
Till here, everyone done?
Yes.
Yes, sir.
Yes. This is section 17, right? This leads us to the last part of the discussion, or last section in this discussion, section 18. Section 18 talks about credit in certain special circumstances. So it has again 6 subsections. 18 subsection 1 gives us 4 scenarios where we can claim input tax credit. Correct? 4 scenarios. First one being you are liable to register and you apply within
30 days.
30
days.
The liability.
30 days.
30
Very good.
days.
30 days of becoming liable. Second scenario,
Voluntary
Voluntary
Registration.
voluntary registration. Now, in these both the cases, I'll be eligible to claim only
inputs.
Inputs.
of stocks
inputs. Very good. Whereas here it is as on preceding the date of liable to register. Here it is as on
Preceding the date of
Preceding the
registration.
grant of registration.
grant of registration. Very good. Preceding the date of grant of registration. Whereas the third scenario where we will be able to where we are converting from composition to regular scheme. Composition to regular scheme. Fourth scenario from
Exempt to
Exempt to taxable supply.
exempt to taxable. Now, in both the cases, we can claim inputs as well as
capital.
Capital goods.
Capital goods reduced 5% depreciation per quarter.
5% reduced.
minus 5% per quarter. Very good. Now, here it is the date preceding the date of conversion, preceding the date of applying regular scheme. Here it is date preceding the date it became
Taxable.
Taxable.
taxable. Then we have subsection 2. Under subsection 2, we talk about invoice date. For all these cases, you can claim ITC provided invoice date cannot be
Beyond
More than 1 year.
beyond 1 year from the date of claiming it. Beyond 1 year. Very good. Then subsection 3 talks about change in the constitution of business. Whenever there is change in the constitution of business, it could be by way of transfer, sale, transmission, merger, acquisition, amalgamation, whatever it is. In all the cases, ITC can also be transferred provided liabilities are also transferred along with such sale. Correct? Then subsection 4 is ulta of subsection 2. It talks about regular being converted to composition and taxable good becoming exempt. Taxable good becoming exempt. In both the cases, we have to reverse the ITC on inputs and capital goods. Capital goods obviously minus 5% as on the preceding date of such conversion. Yes, subsection 5 talks about rules which we need not bother much about. Subsection 6, supply of capital goods, sale of fixed assets. In case of supply of capital goods, tax payable is equal to
Transaction value or ITC minus
ITC
5% per quarter, whichever is higher.
very good. Transaction value under section 15 multiplied by the tax rate, or ITC claimed minus 5% per quarter or part thereof, whichever is higher. That is what 18.6 tells us with regard to tax payable in case of supply of capital goods.
Capital.
Are we clear till here?
Yes.
Yes. Then we also discussed about utilization of ITC, the order of utilization of ITC. Correct. IGST against IGST, then CGST, SGST. Once IGST is exhausted, go to CGST, first against CGST, then against IGST. Then SGST, first against SGST, then against IGST only if CGST credit is fully exhausted. Right, that's the order of utilization of ITC. Then we also discussed about Rule 86A. In case of Rule 86A, we understood that the proper officer will have the power to restrict what?
Utilization.
Utilization of
Utilization
ITC.
of credit. Very good. Restrict utilization of credit, various circumstances they have given. Red fake invoice, supplier not existent, recipient not existent, etc. Then rule 86B, the last one, which was again restriction on utilization of ITC. Restriction on utilization. Here we have first applicability. When your taxable turnover in a month exceed
50 lakh.
50 lakhs, yes, then it is applicable. What is the restriction? The restriction is you can utilize, or rather you cannot utilize more than 99%
of ITC.
output liability.
Output liability.
Utilize ITC up to 99% of output liability. Minimum pay 1% in cash.
1% in cash.
Exception to this restriction, first one, payment of income
tax is
tax.
paid
Income tax more than 1.
Payment
than
of
1 lakh
income tax
in preceding.
more than 1 lakh in each of the last 2 financial years. Correct? In each of the last 2 financial years. By whom? By the registered person
100%.
or
Partner.
Karta.
Karta.
any 2 partners.
Managing
We talk about
director,
Board of trustees.
managing director
Board of
or
managers.
whole-time director, the managing committee, members of the managing committee, or member of board of trust. Yes, these people. Second, refund of unutilized ITC. Unutilized ITC in relation to exports or inverted duty structure of more than rupees 1 lakh in the
Preceding
financial year.
preceding financial year. Very good. The third exception, cumulative satisfaction of 1% criteria in that financial year. Last one,
Specified register person.
specified persons. Yes. Specified persons. We have, who are those? Public
Government
sector.
department.
sector undertaking.
Public
Government
sector.
departments,
public sector and
local
Local
authority,
authority. Statutory body.
statutory bodies. So for these cases, 86B doesn't apply. Is this clear? Till here, everyone?
Yes.
Yes. So this is about input tax credit. Okay. So can we all come back to the material? We'll just look at any point that we have missed. Input tax credit, section 16, eligibility and conditions for taking input tax credit. Eligibility for taking ITC, registration under GST is compulsorily required. Goods or services to be used for business purposes. Section 16(2), conditions for taking ITC, registered person will be entitled to ITC on inward supply only if all the following 6 conditions are fulfilled. 1. Possession of tax-paying document. 2. Details of invoices or debit notes uploaded by the supplier in his GSTR1 or IFF and details communicated in GSTR2B. 3. Receipt of goods and services, that is bill to ship to, deemed to have been received. 4. ITC is not restricted. 5. Tax to be paid to the government. For that we have Rule 37A. 6. File the returns under Section 39. So with regard to clarification on availability of ITC as per Section 16(2)(b). 16(2)(b) talking about receipt of goods or service in respect of which have been delivered by the supplier at his place of business under X work contract. Now receipt of goods or service, should I receive it in my premise? If the agreement is X work contract wherein manufacturer has manufactured it in his factory, his responsibility stops at the time when he makes that goods available in his factory, it's my responsibility to bring it. In that case, till should I wait till I bring that goods into my factory, or whenever I take the delivery handover of the goods, I'll be eligible?
The time of handover.
Handover. That is
Handover.
what this circular tells us. Very good. In case of X works contract, transfer of title in goods occur when the goods are handed over by the supplier at the premise. When such handover of goods happen at the supplier's place to the recipient or the transporter, recipient is deemed to have received the goods under 16(2)(b) and hence allowed to claim ITC at such time itself and not to wait until goods reach his premise. Goods received in lots, ITC available only on receipt of last lot. Payment for invoice to be made within 180 days, else reverse the ITC along with interest and reclaim upon the payment. Exception, 180 days condition not applicable if supplies on which tax is payable under reverse charge, deemed supplies without consideration. Schedule 1, additions made up to the value of supplies on account of supplier's liability in relation to such supplies being incurred by the recipient of supply as per 15(2)(d). Under situations given in points B and C, value of supply is deemed to have been made. For Schedule 1 and addition, it is deemed to have been made. 36 subsection 3 rule says you cannot claim ITC if it is related to demand involving fraud. Fraud related demand, you cannot obviously claim ITC, natural. Rule 37A, reversal of ITC in case of non-payment of tax by the supplier and reavailment thereof. Section 31 read with Rule 47A. If supplier does not furnish return in GST R2E for the tax period corresponding to the said statement of outward supplies till 30th September following the end of the financial year in which ITC in respect of such invoice or debit note has been availed, the said amount of ITC shall be reversed by the said recipient while furnishing a return in GST R2B on or before 30th November following the end of such financial year during which such ITC has been availed. However, where the said amount of ITC is not so reversed by the recipient, such amount shall be payable by the said person along with interest thereon under section 50. Where the said supplier makes payment of tax payable in respect of the aforesaid supplies, the said registered person may re-avail the amount of credit reversed by him. If depreciation is claimed on tax component, ITC not allowed. 16(3). Time limit for availing the ITC, 30th November of succeeding financial year or date of filing of relevant annual return, whichever is earlier. Exception, time limit under section 16(4) does not apply to claim for re-availing of credit that has been reversed earlier. Clarification on time limit under section 16(4) of CGST Act in respect of RCM supplies received from unregistered persons. In case of supplies received from unregistered suppliers, where tax has to be paid by the recipient under RCM and where invoice is to be issued by the recipient of supplies in accordance with 31(3)(f) of CGST Act, the relevant financial year for calculation of time limit for availment of ITC under section 16(4) will be the financial year in which invoice has been issued by the recipient, subject to the payment of tax on the said supply by the recipient and fulfillment of other conditions and restrictions of section 16 and 17. So, for RCM, what are they telling? I have to consider the year in which invoice is issued. From that time, you have 16(4) time limit. In case the recipient issues the invoice after the time of supply of the said supply and pays the tax accordingly, he will be required to pay interest on the same. We have already discussed about the time limit under Rule 47A, correct? In case of delayed issuance of invoice by the recipient, he may also be liable to penal action under 112. Clarification of time limit, right? In case of supplies from unregistered person liable for RCM under 9(3) or 9(4), who will be issuing the invoice since supplier is unregistered?
Recipient.
Recipient. We call that self-invoice, correct? Recipient shall issue the invoice based on which ITC can be availed. To claim the ITC on such invoices for the time limit to avail ITC under section 16(4), the relevant financial year shall be the year in which such invoice is issued, not the year in which supply is received. However, with effect from 1st of November 2024, Rule 47A is also applicable for time limit to issue the self-invoice. So that is about the clarification. Then 16(5) and 16(6). 16(5) overrides 16(4). It says for invoices or debit note relating to 17, 18, 18, 19, 19, 20 and 2021, last date to claim ITC is 30th November 2021. However, no refund of tax paid or ITC reversed earlier will be allowed. 16 subsection 6, where registration is cancelled and subsequently revoked by an order, then the time limit to claim ITC shall be time limit as per 16(4) or 30 days from the order of revocation of cancellation, whichever is later. Such ITC should not be restricted under section 16(4) as on the date of order of cancellation. However, no refund of tax paid or ITC reversed earlier will be allowed. Similarly, restriction on ITC in proportion of taxable supplies, business supplies, that is 17(1) and 2. ITC is restricted in proportion of use of goods and or services in case of taxable or zero rated supplies for business purposes. 17(4), that is option given to banking company that 50% lapse. Not important for us from examination point of view. A banking company or financial institution including NBFC which accepts deposits or extends loans or advances has the option to limit its availment of ITC to 50% of eligible ITC each month and remaining ITC shall lapse. Blocked credit cannot be availed. Restriction of 50% shall not apply to the tax paid on supplies procured from another registration with the same entity. 100% distinct supplies, 100% credit you can claim. The option once exercised cannot be changed during the remaining part of the financial year. Then we discussed about 17(5) block credit. Motor vehicles, other conveyance and related conveyance, insurance, servicing and repair maintenance, vessels and aircraft allowed if it is used for making further taxable supply of such motor vehicle. Example, trader of motor vehicle. Making taxable supply of transportation of passengers. Example, travel operator offering passenger transportation service. Making taxable supply of imparting training or driving such motor vehicle. Example, motor driving schools.
Motor driving schools.
Yes, similarly, transportation of goods. The point here is the first 3 points, Bhavna, were all taxable supplies. Whereas here it is just transportation of goods. It doesn't specifically talk about taxable supplies. Right? Even if such transportation of goods supply is not taxable, for this purchase of this vehicle, you can still claim ITC. Motor vehicles exclude vehicle running upon fixed rail, special purpose vehicle for being used in a factory or any enclosed premises, vehicle with less than 4-wheeler fitted with engine capacity up to 25 cc. Those are excluded from the definition of motor vehicle. Thus, railways, 2-wheelers or 3-wheelers with engine capacity up to 25 cc, bicycle, etc. do not fall within the definition of motor vehicle. Motor vehicles for transportation of persons with seating capacity up to 13 persons, including the driver. Normally, the credit is blocked. However, it is eligible if used for the following. Which are those following? Vehicle, if it is non-motorized vehicle, eligible. Motorized vehicle, if it is used for transportation of goods, eligible. If it is used for transportation of passengers having more than 13-seater capacity, eligible. Up to 13-seater capacity, if it is used for specified purposes, eligible. Other than specified purpose, not eligible. Same way, general insurance, servicing, repair and maintenance relating to ineligible motor vehicle. If the motor vehicle is eligible, I'll get the input tax credit on insurance servicing as well. If the motor vehicle itself was ineligible, then normally the credit is blocked. However, eligible if it is used for eligible purposes when it is received by manufacturer of ineligible motor vehicle, vessels or aircraft, or supplier of general insurance service in respect of ineligible motor vehicle, vessels or aircraft insured by him. Similarly, leasing, renting or hiring of motor vehicles, vessels or aircraft on which ITC is not allowed. However, it is eligible if it is used for following. Such services when used for making an outward taxable supply of same category of service or as an element of taxable composite or mixed supply. Such services when provided by an employer to employee under statutory obligation. Then food and beverages, outdoor catering, healthcare services and other services. Food and beverages, outdoor catering, beauty treatment, healthcare service, cosmetic and plastic surgery, life insurance and health insurance, if it is normally blocked. However, if it is eligible if it is used for the following. Such goods and or services when used by a registered person for making an outward taxable supply of same category of goods and or service or as an element of a taxable composite or mixed supply. such goods and/or services when provided by an employer to its employee under a statutory obligation. Those are the two exceptions that we have for these type of services. Whereas for membership of a club, health and fitness center, travel benefit extended to employees, leave travel concession, only exception is statutory obligation. Correct? Then we discussed about works contract, ITC input services for further supply of such, that is subcontracting. Immovable property is plant and machinery when value of works contract is not capitalized. Self-construction, not capitalized and other than plant and machinery, two exceptions available. Inward supplies charged to tax under composition levy. Inward supplies received by NRTP, only IGST on goods imported. Inward supplies used for personal consumption. Free samples, gifts, goods lost or stolen or destroyed or written off. Tax paid in fraud cases, detention, confiscation, etc. Clarification on availability of ITC on ducts and manholes used in the network of optical fiber cables in terms of 17(5) of CGST Act. Ducts and manholes are basic components for OFC network used in providing telecommunication services. In view of explanation in section 17, it appears that ducts and manholes are covered under the definition of plant and machinery. If they are covered under plant and machinery, what happens?
Allowed. Allowed. ITC is allowed.
Very good. As they are part of duct OFC network for making outward supply of transmission of telecommunication signal from one point to another. Moreover, ducts and manholes used in the network of OFCs have not been specifically excluded from the definition of plant and machinery in the said explanation, as they are neither the nature of land building or civil structure, nor are in the nature of telecommunication towers or pipeline laid outside the factory premises. Accordingly, ITC can be claimed on such ducts and manholes. So in this revision material, wherever we have these circulars which are in bold and italics, don't miss those things. Okay, normally in the question paper, the last question will have two sub questions. In that one sub question, normally with regard to latest circular, based on the latest circular only they will ask. So these circulars we should not miss, because if we know these provisions, full 5 marks we can score there. Correct? So for that purpose, do not miss those things. Similarly, credit in certain special circumstance, section 18, person who has applied for registration within 30 days from the date of becoming liable, inputs the date immediately preceding the date from which he becomes liable to pay tax. Person who is not required to be registered but obtains voluntary registration, inputs date immediately preceding the date of registration, but ITC to be availed within 1 year from the date of tax invoice by the supplier. Registered person who ceases to pay composition tax and switches to regular scheme. Registered person whose exempt supplies become taxable supplies, both inputs and capital goods, immediately preceding the date from which he becomes liable to pay tax under regular scheme, immediately preceding the date from which such supply becomes taxable. 1 year time limit is there. Along with that, capital goods 5% per quarter to be reduced. Similarly, reversal of ITC on switching to composition levy or exit from tax paying status, same as above, 5% per quarter after reduce in case of capital goods. Then amount payable on supply of capital goods or plant and machinery on which ITC has been taken. If capital goods or plant and machinery on which ITC has been taken are supplied outward by the registered person, he must pay an amount of ITC taken on such goods reduced by 5% per quarter or part thereof from the date of invoice for such goods, or tax on transaction value of such capital goods or plant and machinery, whichever is higher. That is 18(6). What happens if transfer of ITC on account of change in the constitution of registered person in case of sale, merger, demerger, amalgamation, lease, transfer, or change in the ownership of business, etc.? The ITC that remains unutilized in the electronic credit ledger of the registered person can be transferred to the new entity, provided there is a specific provision for transfer of liabilities in such change of constitution. Order of utilization of ITC, IGST, first against IGST, then CGST, SGST in any order in any proportion, CGST, first against CGST, then IGST, not permitted against SGST, SGST first against SGST, then against IGST only after ITC of CGST has been fully utilized, but not permitted against CGST. Then Rule 86A, restriction on utilization of ITC. The commissioner or an officer not below the rank of an assistant commissioner authorized by him is empowered to impose restriction on utilization of ITC available in the electronic credit ledger if he has reasons to believe that such ITC has been fraudulently availed or is ineligible. The restriction can be imposed on the following, right? Based on invoice or document issued by non-existent registered person or by a supplier not conducting any business from the place declared in registration, or without actual receipt of goods or services, or both, or in respect of any supply, the tax in respect of which has not been paid to the government. Registered person availing ITC has been found non-existent or not to be conducting any business from the registered place of business. Registered person availing ITC is not in the possession of tax invoice or debit note or any other prescribed valid document for it. Such restrictions can be imposed for a period of up to 1 year from the date of imposing such restriction. Similarly, Rule 86 year restriction maximum for 1 year. They can restrict. Beyond that, compulsorily they have to release the restriction. So what they have to do before that only, they have to do the complete investigation and see whether there was fraud or not. Correct. Whereas Rule 86B, restriction on use of amount available in electronic credit ledger, applicability of Rule 86B. Rule 86B applies to a registered person having value of taxable supply other than exempt and zero rated supply in a month exceeding 50 lakh. What is the nature of restriction? The registered person to whom the said rule is applicable cannot use ITC to discharge output tax liability in excess of 99% of such tax liability. Minimum of 1% should be discharged using electronic cash ledger. Exception, payment of income tax more than 1 lakh in the last 2 financial years, who either the registered person or Karta, proprietor, managing director, any of the 2 partners, 1 partner not sufficient, 2 partners, whole-time directors, members of managing committee, board of trustees. Receipt of refund of ITC of more than 1 lakh in preceding financial year under zero rated supply without payment of tax, inverted duty structure. Payment of output liability through electronic cash ledger in excess of 1% of the total output liability in the current financial year. Specified registered persons, government department, PSU, local authority and statutory body. Then we had also discussed about this circular in case of warranty replacement. For such warranty replacement parts which is given by the manufacturer free of cost, can I claim ITC?
No, sir.
No, sir. Warranty.
We had discussed we can
Yes,
claim
sir.
because it is part
Composite
of my
supply.
original supply. When I sell the vehicle, when I sell the goods, we say along with the sale, we are giving 3 years warranty. That means it's a composite supply. So whatever happens subsequently is part of this composite supply. Since the composite supply is taxable, I can claim ITC on that as well.
Sir,
Right? That is
within
what
3 years, ಸರ್ 3 ವರ್ಷದೊಳಗಡೆ ಏನಾದ್ರೂ ಇದಾದ್ರೆ ನಾವು ಕೊಡ್ತೀವಿ, ಪಾರ್ಟ್ ಎಕ್ಸ್ಚೇಂಜ್ ಮಾಡ್ತೀವಿ. ಅದಾದ್ಮೇಲೆ ನಾವೇನ್ ಕೊಡಕ್ಕಾಗಲ್ಲ.
and that way a customer has to pay money. We are not giving free of cost. Correct. Yes. The value of original supply of goods provided along with the warranty by the manufacturer to the customer includes the likely cost of replacement of goods or its parts as the case may be, and there are repair services to be incurred during the warranty period. Therefore, these supplies cannot be considered as exempt supply, and accordingly, the manufacturer who provides replacement of goods or its parts as the case may be, and there are repair services to the customers during the warranty period is not required to reverse the ITC in respect of the said replacement of goods or its parts as the case may be, or on the repair services provided. There may be instances where a distributor of a company provides replacement of parts and or repair services to the customer as a part of warranty on behalf of the manufacturer. No separate consideration is charged by the distributor in respect of said replacement and or repair service from the customer. In such cases, no consideration is charged by the distributor. No GST is payable by the distributor because no consideration, not a supply. However, if any additional consideration is charged by the distributor from the customer, either for replacement of any part or any service, then on that additional consideration, GST will be payable. We had discussed those 4 different circumstances where manufacturer gives us free of cost, manufacturer asks us to replace from the stock that he has sent and pay him only 99%, excluding that pay him, right? Or in certain cases, you will ask the manufacturer himself to replace the parts, or you purchase from the manufacturer by paying money and recovering it from the manufacturer subsequently. Right? All those 4 scenarios we had discussed. Just go through that because at the end of the day, the summary is the same. It's part of composite supply. Therefore, we will be eligible to claim ITC. Correct? So that is about input tax credit, right? We had an exhaustive discussion on that in ITC because it's very important from examination point of view. Everyone clear with this? Till here, anyone has any doubts? No? Okay, fine then. So obviously we will not be able to complete the discussion on exemptions, right? We have only 4 minutes left. We'll not be able to, so we'll not start exemptions. We'll look into some problems. We'll look into some questions. So what we will do is we'll take one more short session. It will be on Thursday. Okay, Thursday from 4 to 5. It should be sufficient. It'll most probably it'll get over before that. But if time permits, we can look into some extra questions as well, wherein we'll first discuss about exemptions and then solve problems. Okay. So what problems that we'll be solving? The picture of it we'll just start today. We'll get to know about it. Can we all come to the revision material? Page number, I think 128, 127. So we have here chapter wise questions, question bank. Okay, first chapter, introduction. See, May 25 MTP from the introduction. See, normally we ignore the introduction chapter, but there are questions being asked. Jan 25 examination also, there was one 3-marker question. I'll show that. What are the commodities which have been kept outside the purview of GST? What are those?
Alcohol,
Alcohol, human consumption,
tobacco,
spirit rectified.
D2. Alcoholic liquor for human consumption and petroleum products. Tobacco and drugs we cannot tell because they are under GST. In addition to GST, something else is charged. Correct? So we can only tell these two, petroleum as well as alcoholic liquor for human consumption. However, alcoholic liquor for human consumption definitely cannot be further brought into GST. Examine the status of taxation after introduction of GST. It cannot be brought in under GST, whereas petroleum products, they can be brought into GSTs based on the date notified by the central government. Look at this, 3 marks, Jan 25 exam. State any 6 state taxes that were subsumed into GST. Can we tell?
Entertainment tax,
Entertainment tax,
entry,
VAT,
entry tax,
Luxury tax, luxury tax,
luxury tax, VAT,
entry tax, purchase
entry
tax.
tax over.
sales
sales tax,
Yeah, sales tax, VAT, correct. Then one more.
tax
Tax
surcharge.
on lottery and everything.
Surcharges on those, yeah. Surcharges, state surcharges and cesses related to supply of goods, entertainment tax, except levied by local bodies, levied by state government only. If entertainment tax is levied by local bodies, that is still applicable. That is still applicable, right? Tax on lottery betting and gambling, entry tax, purchase tax, VAT or sales tax, luxury tax, and taxes on advertisement. Among this, if you have written 6, you will get full 3 marks there, right? Jan 25 exam. Then, this is institute material. This anyhow is easy. Discuss the leviability of GST or otherwise. Alcoholic liquor for human consumption outside the scope of GST because 9.1 says it excludes. Petroleum crude 9.2 says till it is notified. Tobacco, along with GST, we also have state excise, correct? Yeah, no, sorry, central excise. Union government has retained the power to excise duties on tobacco. Central excise. Similarly, opium, narcotic drugs, GST plus state excise duty. Yes, such kind of questions they can ask. It's September 24 MTP. What are the commodities that are same question, right? Kept outside the purview of GST, examine the status of taxation. So these are the questions that normally they can focus on from this particular chapter. If I similarly move on to supply chapter, May 25 MTP2, examine whether the activity of import of service in the following independent cases would amount to supply. First one, Miss Shanaya received interior decoration service for her residence located at Bandra, Mumbai from her brother Mr. David residing in Sydney, Australia, wholly dependent on Miss Shanaya. Further, Miss Shanaya did not pay any consideration for the said service.
deemed to pay.
So, import of service without consideration from, is he a related party?
Yes, sir.
Wholly dependent.
Correct. Wholly dependent, brother, related party. Is this
Should be
sufficient?
related.
Yes, sir.
In the course or furtherance of business is required. But she has taken that interior decoration service for her residence. Correct. So it's not in the course of furtherance of business, not a supply. Not a supply. Right. This is how the questions will be. We have to analyze this. We have to. So what should we write? First, we have to write when it will be considered as supply. All those conditions. Then in this case, yes, that condition satisfied, this condition satisfied, but not in the course of furtherance of business. Therefore, it is not a supply. Right? They normally ask these kind of questions for 4 marks, 5 marks, 2 marks each, or 2.5 marks each. Will your answer change if in the above case, if Miss Shanaya has taken interior decoration service with regard to her business premise and not residence?
Yes.
It is a
Yes,
supply.
sir.
Yes, then it would be in the course of furtherance of business. Understanding, everyone?
Yes, sir.
Yes.
Yes, sir.
Yes, sir.
Yes, look at this. May 25 MTP1. I'll just look at this question and conclude. State the activities which are treated as supply even if made without consideration. What are we supposed to do?
Deal supply schedule.
Schedule 1.
Schedule 1.
4 items under schedule 1. List. You'll get full marks. Right? So such kind of questions, because they're asking such kind of questions in MTP, there are definitely chances that they can ask it in the examination also, right? There will be such kind of questions also. It's not always analysis based. Some questions will be where you have to just list. Clear, everyone?
Yes.
Yes. Okay, fine then. So we will continue with this discussion, not tomorrow, on Thursday. Okay, tomorrow you have income tax. Thursday you also have income tax, but 1 hour we'll also discuss about GST. Yes, Bhavna.
Sir, the compilation of the new amendments, sir.
Noted. Yes, it will be shared. Yes. Fine. Okay, we'll continue in the next class. Okay, you have pass out meet, right? Everyone attend. Don't miss it. Extremely important. Okay, we get the motivation. It's thank you.
Thank you,
Yes,
sir.
sir. Bye,
Yes,
sir.
sir.